volume. The only time, like the only reason we use it is to identify if it's liquid enough to trade. It's like as long as you have 400,000 or more shares volume, normally those options contracts are gonna be fine. Ideally, we want like 1 million, because then it's very liquid and the spreads are tighter. And this is the reason I don't use it. This is the reason Rob didn't use it. It's because you can't quantify what it means. Because people will say, well, when the volume spikes, it's capitulation volume at the highs and the lows. But then they'll also say when this move's going, it's really going hard. We have a lot of volume. So which one is it? Is it capitulation at the highs or lows, or is it there's a lot of volume so the move keeps going? So you can't quantify why it's there. Does not mean that you can't use it if that's something you want to do, but you can't quantify what it means. All you can say is there's a lot of volume or there's not a lot. The only thing that it's relevant for is knowing you have enough exit liquidity or entry liquidity, depending on what you're doing. Like if you're trading 100, let's say you're trading 200, 300, 400 options contracts, then the volume becomes very relevant. But that also means like if you throw the first punch, like let's say you're looking at Baidu Shooter on the 60, if you buy 500 contracts short, then that's a pretty hefty first punch. Or if you short like a couple thousand shares, that's a pretty hefty first punch. So you can also like, and this is the thing, like the setups we're doing, we want to be the ones that throw the first punch. Like the more shares you have that you can short or long, like the better it is, because we're causing the stuff to occur. Like if you take the 322 on crowd, you're causing full time frame continuity back through a broadening formation with a signal. So you throw the first punch and then it gets going, which is why we say like it's better to add and continue to short and take those shares that they want to sell, because it speeds things up. So like if you're in a short position, you start covering, you're giving them liquidity to get out of their longs. Whereas if you don't, then all those guys who were previously long, they have way less liquidity to get out. Like this is the thing, like crowd, did I have to look at the volume to see the 322? I did not. Would it maybe show up on a volume scan because it's so red on the day? Yeah. Does that mean it always would? Not always. You can be really up or really down and not have much volume. Like SPY, everyone's saying we need more volume. We need more volume. Let's go and take a look. Last week, SPY had one of its lowest volume weeks in years. And that was last week, right? And it was a short week, so that can happen, right? But it still closed bright green. Whereas the week before had a ton of volume and went nowhere. So can you quantify what that means? If it's slightly less or slightly more or really off the charts? Not really. Now, notice really big red week, super high volume. So is it high volume where it's following through? Or is this high volume capitulation at the lows and now everyone's short, so we're going the other way? You can't quantify it. Whereas we can say if this goes 2-2 here, the magnitude's here, and it doesn't matter how much volume there is. If it's going 2 down, it's going there. So it goes 2 down, and then it goes 2 down again, and then it goes there. So we can quantify that. We cannot quantify what's happening here. Now, if you're going to use it, what I would suggest is this. If you're intraday guy, you can look for volume at your broadening formation levels. So like you'll notice ES down here, volume right here, this is the long. And you can see right at the highs here, this is where you take profit. So you can see spike, spike. But you can't quantify why that spike's occurring. So it's not so much you use this spike as a reason like to believe things. It's more so use the spike as a reason to think like, okay, well, a lot of shares are being traded here. What's happening? It's like, well, we just took out the morning lows. It's like, okay, we stopped guys out. Whoever was long in the morning into full time from continuity, they're stopped out with the intraday guys. Then it breaks and reclaims, and we see the volume. It's like, all right, we're in. Then we can risk the low a day here, and then we can look to ride it up into the high a day. And then at the high a day, you can see they really long into the highs. A lot of shares getting filled. A lot of people stopped out of their shorts up in here, so you get higher volume. Does that tell us it's going to have to go the other way? No. Whereas this one tells us it's going this way. This one just tells us maybe they're taking profit or we just stopped a lot of guys out. Does not mean it has to roll over and go down. So you can see, although they're both spikes, this would tell you something different based on what we know with the strat. And if we go to like, let's say Baba. So Baba, you can see a lot of volume at the close. Let's compare yesterday's open to a previous open. So you can see, does the volume increase in here? It does. But can we quantify this volume being important for it reversing or continuing? Not really. What we can quantify though is right here, full time frame continuity occurred at 74.31 before all the volume, which is why we say the volume will come. If you're right, volume will come. So it occurs here, change in continuity at 9:33 on the 60-minute flip, which can be quantified. The volume then comes in. We go here. You can see it was doing nothing, going sideways. It goes full time frame continuity up here at 11:56. You can quantify that. The volume then comes in, supports the move. And you'll see this move, so they're quicker, it's more directional, like 4.2%. Notice it goes up on volume, comes back down just as much with less volume. So does the volume give you money or does the price action give you money? It's the price action. So even though this has less volume, it still erased that whole move with a big amount of volume. So you just can't quantify what it exactly means. Doesn't mean you can't use it, but I wouldn't use it so much for analysis. I'd use it for sorting them. So like if we can get the Strat Alert site to exactly what I want, we would have a volume tab in here where I could click and sort by the highest volume just to see the biggest stocks, because like Amazon, any of the big market caps, the really big market caps have the most volume for the most part. And then if you see anything pop up on that list with a ton of volume as well, you can say, well, there's a lot of trading activity going on there, but what do we know to be true? Because a lot of volume tells us nothing. It just tells us there's a lot of volume. The 2s, 3s, broadening formations, signals, continuity, that's what tells us what's going on. Let's take a look at crowd. So you can see today, did the volume show up? It did. Right here off the TT day. So we take it, and then the volume just confirms what we already knew. D-Dog probably is a good example of this too. So D-Dog, notice, so they have some volume spikes in here. Let's just say the average is around here. We had the inside day break in here. Volume doesn't change, right? Like there's volume, it's a spike, yeah, like it goes higher, but it doesn't really change, but it still goes up. And then it actually goes really low volume in here. But in here, you're still getting 2.6% moves, even with this volume here, which is, it's like right here, this volume's 44,000, and it goes in 2%, 2.3% in an hour. Right here, the volume is 130,000, and it only moves 1.42%, and it's a 3. So very small, but more volume than this. So do you need volume? You don't.